what's happening now is that for several years, everybody has been under the false impression that the Fed was going to raise rates because we had a legitimate recovery and the Fed policy actually worked. Well, what I've been positioning for is the realization that we had a phony recovery, that what the Fed did didn't work, and that rather than raising interest rates, they're going to launch a brand new easing cycle. And I think the Fed is getting ready to cut rates again. I think they're going to launch QE4, and the market is just starting to figure this out. They're at least figuring out that the Fed's not going to raise rates. And so now the markets are pricing out all the rate hikes they priced in. This is great for gold. This is great for gold stocks. This is great for emerging markets. This is great for any asset that was hurt by the factoring in of higher rates and a stronger dollar.
All right, and you're saying this is also good for Wall Street? You see more upside from these record levels we're already at for U.S. stocks?
Well, not in real terms, certainly not in the price terms of gold. The Dow Jones will continue to lose ground priced in gold, and I think it will not do that well priced in other currencies. It'll do okay in the dollar, but there's not a lot of upside for the stock market because the U.S. stock market is dramatically overvalued, and we're on the cusp of a recession or already in one. So I see pressure on U.S. corporate earnings. The only thing the U.S. stock market has going for it is the Fed, but the stock market's friend is the dollar's enemy and the economy's enemy. The more the Fed tries to prop up the markets with cheap money, the more it undermines the economy and the more it undermines the dollar, and the more it creates a alternative or an incentive to invest outside the United States, and I think that's what's going to happen. I think more people are going to discover that the U.S. is not a real safe haven.
Okay, so Peter, if that is the case, and in fact, if you say you don't have US stocks in your portfolio or bonds, you've got emerging markets, you've got gold, but you have done so well already this year, where's the upside going to be going forward? I mean, you've got emerging markets like Indonesia already up, 18% or so this year alone?
Well, I think this is the beginning of a huge move. I mean, if you remember, the last time we had a dollar bubble that burst, it was in 2001. And the dollar benefited from another false paradigm. It was the new era, the dot-com bubble. It was the idea that the U.S. was going to pay off the national debt because we had surpluses as far as the eye can see. And when the dot-com bubble burst and September 11th happened and we went into recession, the air started coming out of the dollar bubble. And we had a huge 7-year rally in emerging markets. We had an enormous rally in commodities. Remember, oil went from 30 to 150. Gold went from under 300 to 100. The dollar index tanked from 120 down to 70. People made a ton of money investing abroad and in commodities until the party ended in 2008 with the U.S. financial crisis. So to me, this looks a lot like 2001 all over again. Another first false paradigm is blowing up, false optimism about the U.S. economy and confidence in the Fed. And this is the beginning of a big move.